Is this 2008 for Ontario real estate? That's what this article seems to think, and I'm going to talk about this today. So Canadian real estate resembles U.S. bubble after perfect storm, says BMO. One of Canada's largest banks just delivered bad news for real estate investors. It's a bubble already deflating. BMO Capital Markets warns that home prices have been sliding for over 3 years, more closely resembling the U.S. housing crash in 2007 than Ontario's last correction. The bank expects a long, drawn-out recovery, cautioning it's next to impossible to recreate the conditions that fueled the boom. Bubbles are only recognized in hindsight. After a market has already corrected, a bubble implies prices were excessively inflated, and without a correction, it's arguable that an asset class was simply undervalued. That defense was once applied to Canadian real estate, but not anymore. Canadian home prices in Canada, and Ontario more specifically, are still slumping after peaking in early 2022. Interestingly, the current decline is tracking both the 1990s episode in Ontario and national U.S. home prices after 2007. It's a widely held consensus that those two episodes were bubbles, he explained, suggesting the current correction implies excessive exuberance. Okay, so here we are. This is Ontario in the 90s. It's light blue. This is US in 2007. And this is Ontario currently. And as you can see, we are at, we need November, December, January, February. So we need 4 months to go until we are 4 years from the peak. And if we look at the US in 07, it took 5 years and a few months to hit the bottom. So that's for us, that would be spring 2027, which makes sense. I mean, there's a lot of people, there's a lot of different things, the 18-year-long real estate cycle. There's a couple things that I've read that would suggest the bottom is going to be sometime between the end of next year and 2028. And, not that far-fetched to me. Now, one thing I do want to say is this is aggregate home prices in the US, right? So although this is down 25%, what really got the national home price index to go down 25% is the fact that there were a whole bunch of areas that were down 50, 60%. Got them pulled up right here. Las Vegas, Nevada, down 60 to 70%. Miami, Florida, down 50 to 60. Phoenix, Arizona, down 50 to 60. Los Angeles, down 40 to 50. San Diego, down 40 to 50. 50 to 60. 50, 50 to 60. 45 to 55. 50%. So you have the national home price index down only 25%. But there's a whole bunch of areas that were down 50 or 60% to make up that 25%. And here in Canada, Ontario is leading the housing correction, right? So, and I think Canada's down about 18%, 836 at the peak, down to 687 at the bottom. That's about 18%, I think. Yeah, it's a little bit less, 17.8%. So if Canada's going to go down to 25%, how far down does Ontario need to go to make up that, to bring down that national average? Maybe Ontario needs to go down 15% to help drag the national average down, or the national HPI down 7%, right? Just as an example, because if Ontario's leading it, you'd think that they would have to go down a lot more than the national average to bring down the national average, right? So just some thoughts there. Doesn't have to be the case, but this actually did remind me a lot of a chart, and that's the Bitcoin chart in 2017. I'm not comparing real estate. Well, I guess I am, but it's, I don't know. I thought it was interesting, right? So, very similar chart. And then we had an area where things kind of flattened out, were very uneventful. And then eventually it led to a capitulation event before finding a bottom. And if you look at Ontario's current real estate chart, look, trading flat, pretty useless for a while. And now they are going through basically a capitulation event, right? When is this going to end before they find a bottom and build a base before the next takeoff, right? And I don't know, not saying Bitcoin and Ontario real estate are similar, just thought it was interesting, right? Ontario's trajectory now mirrors the U.S. housing crash. If it continues this trajectory, it would take another 5 years to recover versus the 8 years following Ontario's historic trend. The American crash was sharper, but that helped restore affordability and balance the market faster. So if you look at this, it only took like 10 years to get back to peak pricing. So they're saying that if we're to follow the US crash, which was very fast, very sharp, we could be back at peak pricing in 6 years from now, is what I'm gathering. But if it's like the 90s crash, that's going to be a lot slower, then, we're another 7 years away from that peak pricing, is basically what they're saying. BMO explains that the boom was fueled by a rare mix of factors unlikely to align anytime soon. Peak millennial demand, record immigration, pandemic migration, excess liquidity, ultra-low rates, max-out valuations, and most importantly, speculative market psychology. It is next to impossible to repeat those conditions, and thus the bear market in housing staggers until affordability and investment dynamics reset themselves. So I don't think it's impossible to see this. I don't think it's impossible to see this. I don't even know what this means. Like, are they just talking home price to income ratios? Because that probably isn't going to work in Vancouver. So I don't really know what that even means, to be honest with you. And most importantly, speculative market psychology. Well, that could always come back to any market at any time. This, however, I would agree. Pandemic migration. Actually, I don't know if I would agree about this one. I haven't looked into the stats behind that. They could be right about that. I'm going to take their word for that. This one too, and then pandemic migration. Sure. The other ones, I mean, Bank of Canada could come out and they could be like, we are going to inject $900 bajillion into the economy. And then all of this would be back instantaneously. So I don't know about that. Now, I put out a video a couple days ago saying that this correction could get a lot worse than what people think. That would not surprise me. And that would be like a run-of-the-mill market cycle. You know, things get way overheated, then they get way too cool, and that's typically what happens. My base case for what I think is going to happen is I think we've already seen the housing crash. I think it happened in 2022. Prices came down 40% in a couple months. Prices were falling so fast, you couldn't even price a house. It was so hard to sell anything because the prices were falling like $30,000, $40,000 a week. That was a crash, right? I don't think that's going to happen again. I think it's already happened. I think we're just going to see a very uneventful, slow bleed, or a somewhat quick bleed, but not like a crash, but it's going to be a bleed of some sort until we find a bottom. That would be my base case for what I think is going to happen. And that bottom could be in a year, or it could be in 4 years, right? Who knows? But that would be kind of my base case. But I don't know. What do you guys think? Is this Ontario's 2008, or is it worse than 2008? It's already worse than the 90s as per this, right? It's already worse than the US in 07 as well, according to this, right? So I guess it's already worse, but is it going to be substantially worse? Let me know in the comments. Otherwise, I appreciate you for watching. Please like, subscribe. If you want to chat with me about buying or selling in the Fraser Valley, link down in the description. Otherwise, I'm that Agent Kelly. I'm making moves to move you. Peace.